Here are the steps you need to follow if you want to take advantage of business tax credits and deductions to improve your business credit score. This is totally possible. Most of our clients do the same thing, and you can do it too. So here are the steps. First, you need to familiarize yourself with the tools to boost business credit. So when we talk about business credit, you got to have a clear idea about what we're talking about. There are some tools that for the last 30, 40, 50 years have helped millions of small businesses boost their credit score, boost their business credit score. First, you have business credit cards. So business credit cards are important. So if you have a business right now and you don't have a business credit card, you are actually missing out on an important criterion when it comes to boosting your business credit score. And it doesn't matter your FICO score. It doesn't matter, because you can always start with the bank where you're currently at, and you can get a secure business credit card if push comes to shove. Okay, so you need to have a business credit card. Ideally, you want to have an unsecured business credit card. So that's the first tool if you want to boost your business credit. The second tool is you need to have a clean banking history. So when we talk about having a clean banking history, we are looking at not only your personal banking history, but also your business banking history. So in other words, you want to be in a situation where you have no issue, no problem with check systems. You don't have no problem with early warning signs, with telecheck and all those sort of banking history reporting agencies. Make sure that you take care of those overdrafts. Don't have overdrafts. Okay, you want to maintain enough money in your account so that you can cover whatever charges are made onto the account. Those are important things. You also want to register with all the 3 business credit agencies. So we're talking about what? Dun & Bradstreet. We're speaking about Experian Business, and we're speaking about Equifax Business. So this is another tool that will help you boost your business credit. You can also consider business loans. So really, again, here, when we talk about business loans, I'm not asking you to actually get an installment business loan. You can get business equipment financing. You can get invoice factoring. You can get a merchant cash advance, but you got to have something. Now, just be sure that those lenders are reporting your transactional history to the business credit reporting agencies, because some lenders don't report your history. So make sure that you are actually always your history is always being reported, so you can get credit for your good behavior. Same thing with the net 30 vendors. This is another tool that allows you to boost business credit, but again, make sure that they are reporting your transactional history to the business credit reporting agencies. Very important. So now that you have a clear idea about what we talk about, what we mean when we talk about tools that you need to boost business credit, let's dig a little deeper into the top small business tax deductions. And what I want to do is I want to draw a correlation between those deductions. Okay, so between those deductions and your business credit tools. In other words, I want you to benefit on both sides. I want you to benefit on the business tax deduction side, so you can actually reduce your tax liability, but also on the business credit side, so you can increase your PAYDEX score and on your other business credit scores also. So each of the business expenses that I'm going to give you right now is tax deductible. So think about, it's very important that for each deduction that I'm going to give you, make sure that you are charging the expense on a credit card, or you are getting a net 30 vendor that actually helps you. In other words, that vendor is reporting your timely payment to the bureaus, or that you are basically financing the expense through a loan, whatever it is. Okay, you have to link that. So advertising and promotion, right? So hiring someone to design a business logo. So if you hire someone to design a business logo, for instance, or if you have the cost of printing business cards or brochures, purchasing ad space and print or online media, sending cards to clients, launching a new website, you can actually have all these things from a net 30 vendor. So you basically can buy those services from a net 30 vendor and ask that vendor to report your transactional history to Dun & Bradstreet, to Equifax Business, to Experian Business. Okay, things like sponsoring an event, running a social media marketing campaign, launching a new website. What I'm trying to say here is that every partner that you engage with in your business, make sure that they are either a net 30 vendor, or you are charging their expense on a credit card, or through a line of credit, or through a loan, or whatnot. Same thing with the bank fees. Now, the thing is, with the bank fees, you cannot actually, like the bank cannot be a net 30 vendor, right? But the bank can be a lender. In other words, you can get a loan from the bank, for example. And if you have positive history with the bank, then they're not going to report the absence of banking fees to the bureaus, but just make sure that you have a clean payment history with the lender on whatever loan you have with them. I want to talk to you now about business meals. By the way, welcome back to the show. I really appreciate having you here. We're having a conversation about, I'm giving you credit tips that if you are a small business owner, I'm giving you a few credit tips that will allow you to take advantage of business tax credits and deductions to improve your business credit score. So let's talk about another deduction here, business meals. And the thing is, remember, you can deduct generally 50% of qualifying food and beverage costs, right? To be eligible for the deduction, the expense must be an ordinary and necessary part of carrying on your business. The meal cannot be lavish or extravagant under the circumstances. The business owner or an employee must be present at the meal. So what you want to do here is that when you have, let's say, food-related expenses, business meals, for example, make sure that you are charging this on a business credit card. Always, systematically. Do not pay this with the debit card. It's not good for you. And don't actually pay the caterer, the catering service provider, through a check or wire transfer. Don't do that. You want to actually have credit. You want to have credit for your whatever charges you make. So charge this on a credit card and make sure that you pay your credit card in full every month. Same thing for business insurance. So the thing is, you can deduct the premiums you pay for business insurance. So this may include property coverage for your furniture, equipment, and buildings, liability coverage, group health, dental, and vision insurance for employees, professional liability or malpractice insurance, workers' compensation coverage, auto insurance for business vehicles, life insurance that covers employees as long as the business or business owner is not a beneficiary on the policy, business interruption insurance that covers lost profits if your business is shut down due to fire or another cause. So what you want to do here is that now, obviously, not a lot of business insurers will want to be paid through credit cards, right? Because anytime you charge something on a credit card, there are fees on both ends, usually on the other end. In other words, the insurer does not want to pay fees. So, but what you want to do is you can actually have a service in place where you charge the premiums on the card, and that service will will make sure that your payments goes to the insurer in terms of cash. And so Plastic, for example, Plastic does a great job at that. In other words, if you don't have cash but you have some decent limit on a credit card, Plastic will convert your credit limit into cash. Now, there are fees involved, okay? So that's one option to do things, but another option that is even better, in our view, in our research, is that you basically tell the business insurer, the business insurance company, to list your payments to the credit bureaus, because you want to take advantage of the fact that you have a good payment history. So just tell the insurance company to report your payment data to Dun & Bradstreet and the other two. So I just want to quickly remind you of today's conversation. The topic I'm just talking to you about, I'm giving you a few credit tips for a small business. How do you actually take advantage of business tax deductions to improve your business credit score? So I want to talk to you now about business use of your car. Okay. Now, if you use your vehicle for business, then you can deduct the entire cost of operating the vehicle. If you use it for both business and personal trips, you can only deduct the cost associated with business-related usage. This is really important to make sure that you have the right the right the right setup in place. Okay, there are two methods for deducting vehicle expenses, and what we have seen here is that you can actually choose whichever one gives you a greater tax benefit. Everybody's situation is different. Your situation might be different from your colleagues, so make sure that you are, if you're a business owner, make sure that you choose the one that works for you. So you can choose to have the standard mileage rate. In other words, you are multiplying the miles driven for a business during the year by a standard mileage rate. And so this varies. The IRS has to set this up every year. So it goes from 56 cents per mile to 58 or 60. It really depends, okay? But those are adjusted for inflation. So that's for the standard mileage rate. You also have the actual expense method. So here you are tracking all the costs of operating your vehicle for the year, including gas, oil, repairs, tires, insurance, registration fees, and lease payments. So what you want to do here is that you want to multiply all of those expenses, right? You want to combine them. You want to multiply those expenses by the percentage of miles driven for business. Okay, note that you cannot switch from the actual expense method to the standard mileage method on the same vehicle. You have to choose one. So bottom line is, both methods require that you track your business miles for the year. So the trick here is that whatever expense you incur on the car, make sure that you charge it on a credit card, or make sure that you actually pay it through a business line of credit or a business loan, and make sure that basically the car service provider reports your data to the 3 business credit bureaus. Okay, very important. You also have contract labor. So if you hire freelancers or independent contractors to help in your business, you can deduct their fees as a business expense. Make sure that you can actually pay their fees through your credit card or debit card, but it's good to use a credit card. And I want to talk to you about another expense that is really great. But by the way, I want to quickly remind you of today's topic. And it's really important that I'm doing this because I want you to really know what we're talking about. I'm giving you tips that will allow you to take advantage of your business tax write-off to boost your credit score. Okay, so let's talk about education. Now, education costs are fully deductible when they add value to your business and increase your expertise. So in order to decide if your class or workshop qualifies, the IRS will look at whether the expense maintains or improves skills that are required in your current business. So there is a smorgasbord of, I would say, criteria or factors that determine whether or not a business education expense is valid. So the IRS will look at things like, classes that help you improve skills in your field, seminars and webinars, subscriptions to trade or professional publications, books tailored to your industry, workshops to increase your expertise and skills, transportation expenses to and from classes. Okay, so this is really important. You also, and for those costs, please, you want to systematically charge them on a credit card. Okay, if you can, on a business credit card for that matter. Or make sure that the service provider lists you as a net 30 account. And whenever you pay them early, they can report the early payments to those 3 business credit bureaus. Same thing for if you have home office expenses, right? So we're talking about if you use your home for your business, you may be able to deduct a portion of your housing expenses against business income. And similar to what we have about the car, there are 2 methods to deduct home office expenses. You have the simplified method. In other words, you can deduct $5 per square foot of your home that is used for business up to a maximum of 300 square feet. Or the standard method, you want to track all actual expenses of maintaining your home, such as mortgage interest or rent, utilities, real estate taxes, housekeeping and landscaping service, homeowners association fees, and repairs. So you want to multiply those expenses by the percentage of your home devoted to business use. So this is really important. And to qualify for the home office deduction, you need to measure up in 2 areas: regular and exclusive use, and it has to be your principal place of business. You also have interest. So when we talk about interest is generally deductible, right? If you take out a loan or use a credit card to cover business expenses, you can deduct the interest paid to your lender or credit card company as long as you meet the following requirements. So you are legally liable for the debts. For example, let's say if your parents take out let's say a second mortgage on their home to help you start a business, you are not legally liable for the debts. In that case, interest on the loan is not deductible, even if you make all of the payments on the mortgage. Both you and the lender intend for the debt to be repaid. A loan that doesn't have to be repaid is a gift, and there are tax consequences when it comes to gifts. Okay, and you and the lender have a true debtor-creditor relationship. So the IRS tends to scrutinize loans between related parties, such as family members. So if you use the actual method of accounting, you cannot deduct interest owed to a related person until the payment is made. Very important. Keep in mind that if a loan is part business and part personal, you need to divide the interest between the business and personal parts of the loan. So the thing is, if you have to take if you want to boost your business credit score through interest, just you want to pay the underlying loan amount. That's all. Because anytime you make a payment, you have the principal and also you have the interest. But the bottom line here is that make sure that the lender or the credit card issuer reports your transactional history to the three business credit bureaus. Same thing for legal and professional fees. So legal and professional fees that are necessary and directly related to running your business are deductible. And so this includes fees charged by lawyers, accountants, bookkeepers, tax preparers, and online bookkeeping services. Okay, and if the fees includes, let's say, payments for work of a personal nature, for example, making a will, you can only deduct the part of the fee that is related to the business. Always make sure that you are able to segregate whatever applies to the business versus whatever applies to your personal life, because this is what the IRS is going to scrutinize if, God forbid, they wanted to ever audit your tax return. And I want to talk to you now about other expenses that you can actually qualify for, and qualify for not just in terms of taxes, but also in terms of your business credit scores. So you have moving expenses. Okay, so actually the TCJA, the Tax Cuts and Jobs Act of 2017 eliminated the deduction for moving expenses for all non-military individuals, but businesses can still deduct the cost of moving business equipment, supplies, and inventory from one business location to another. So, and one thing I need to say here is that please be sure to keep good records, because you got to be able to substantiate all costs associated with your business move. Like if the IRS, again, if they were to audit you, you want to make sure that you are in a position where you can provide all the necessary documentation. Also, same thing with rent expense. If you rent a business location or equipment for your business, you can deduct the rental payments as a business expense. Keep in mind that rent paid on your home should not be deducted as a business expense, even if you have a home office. That rent can be deducted as a part of home office expenses. Okay, and again, the bottom line here is that for every expense, make sure that you either have the service provider as a net 30 vendor, or you can charge the expense on a credit card, or you want to actually fund that expense through a loan or a line of credit. The thing is that anytime you have a tax write-off, make sure there is a strong correlation, a direct correlation for that matter, between that item and your credit. How do I say this? Your credit products. Okay, credit cards, loans, lines of credit. Same thing for taxes and licenses. So you can deduct various taxes and licenses related to your business. So this may include state income taxes, payroll taxes, personal property taxes, real estate taxes paid on business property, sales tax, excise taxes, fuel taxes, business licenses. So normally, state authorities cannot be categorized as a net 30 vendor, but the thing is, you want to make sure that you pay them. I think this is the only exception on this list where you actually just paying for an expense, but you don't get the business credit score advantage of it. Well, you can get let's say you can get a smaller advantage, because if you don't pay on time, you are incurring fines, and the state authorities might report your data to the business credit bureaus also. Okay, so but you cannot categorize state authorities as a net 30 vendor. That's what I mean. But you can pay some of those taxes with credit cards. Yeah. There are also, for example, telephone and internet expenses. This is another category that allows business owners to actually take advantage of not only business tax write-offs, but also opportunities to boost their business credit score. So if telephone and internet services are integral to your business, they can be deductible business expenses. Keep in mind, this is one thing that I want to emphasize. Let's say if you use a landline at the home, for example, you cannot, and I repeat, you cannot deduct the cost of your first line, even if you use it solely for work. However, if you have a second landline devoted to the business, the cost of that deadline is deductible, and the IRS is really adamant at making sure that restriction is respected, is complied with. Okay, and if you use your cell phone and internet connection for both personal and business reasons, for example, again, make sure that you remember you can only deduct the percentage that you can allocate to business use. And I mean, it's nothing complicated here, though. The only thing that might be complicated is that you need to keep an itemized bill or other detailed records to prove the amount of business used in case your return is ever audited. Okay. Also, you can also think about, so for those for telephone and internet expenses, make sure that you charge them on a credit card, on a business credit card. And here also we have travel expenses. So for a trip to qualify as a business travel, it has to be ordinary, necessary, and away from your tax home. So your tax home really is the entire city or area in which you conduct business, regardless of where you live. So you need to travel away from your tax home for longer than a normal day's work, requiring you to sleep or rest on routes. Okay. And so deductible IRS approved business travel expenses include travel to and from your destination by plane, train, bus, or car. You have using your car while at a business location, parking and toll fees, the cost of taxis and other methods of transportation used on a business trip, meals and lodging, tips, laundry and dry cleaning while on a business trip, business calls, shipping of baggage, and simple of display materials to your destination, other similar ordinary and necessary expenses that are related to your business travel. So those things are important. Just make sure that you charge them on a business credit card, for example, or just make sure that you charge them on a business credit card, and make sure that you have the service provider listed as a net 30 vendor. In other words, they have to register themselves as a net 30 vendor so that they can report your good payment history to the 3 credit bureaus. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just giving you some credit tips for small business owners. How do you take advantage of tax write-offs to boost your business credit scores? So I gave you the tools that you need to boost business credit, and I gave you the top small business tax deduction, how you can link the two. Thank you so much for your attention. I'll speak to you another time, but until then, remember, stay marvelous.